Welcome back for my final daily report video with me, Richard, Perry market analyst at Hantec, on Thursday the 2nd of May. Looking at gold, and gold has been consolidating in the last couple of days. It looks now as though there's a building renewed negative move on gold. The closing move yesterday was still a shade above 1276, which has been a bit of a pivot in recent days, but it looks as though that's going to be broken today, down to 1270, continuing the move that we saw in the wake of the Fed. You can see a bit of a spike around on gold on the Fed, initially up to 1287 and then sharply back down lower again after Jerome Powell talked about the inflation decline being transitory, and that hit gold under pressure. Now, it's interesting that on this chart, 1278 on the hourly, a little bit of old support in the last few days became resistance on the rebound overnight. So that is initial resistance, but certainly the market looking as though it's turning more corrective. Look at those MACD lines on the hourly, also the RSI, so you'd be looking to sell into strength. Hasn't closed yet below 1276 in the last week as the rally has rolled over, but it certainly looks as though there is going to be a closing below that level today. Look at these momentum indicators on the daily chart. RSI failing at 50, rolling over. MACD lines rolling over. Stochastics crossing lower. So these are all negative signals, and a move below 1266 would certainly put that uptrend, that long-term 8-month uptrend, under pressure. Currently comes in at 1265, and a closing breach of that, and you really are struggling for any real positivity surrounding gold on a technical basis. 1240 comes into play as a bit of an old pivot area. 1240, not to the tick, but certainly 1240 area. And yeah, I think a retest of 1266 could be on the cards. And as I said, a closing breach would be really quite negative. So I wish you good luck in your trading today, and I will speak to you again tomorrow.